This is the Southside School of Financial Freedom Watchlist and Market Report for the week ending December 26, 2020. Our question this week is, what are the dogs of the Dow? The answer will be provided later in the video. This week, the market was mixed. The Dow Jones Industrial Average increased 0.23% on Thursday and was up 0.07% for the week. The S&P 500 increased 0.35% on Thursday, but was down minus 0.16% for the week. The Nasdaq increased 0.26% on Thursday and was up 0.38% for the week. Looking at the week, we can see that there were 7 up finishes versus 5 down finishes for the indexes. On Monday, the Dow Jones Industrial Average was up, but the S&P 500 and the Nasdaq were down. On Tuesday, it was the Nasdaq that finished up, while the Dow Jones Industrial Average and the S&P 500 finished down. On Wednesday, the Dow Jones Industrial Average and the S&P 500 were up again, and it was the Nasdaq that was down again. On Thursday, all the major indexes were up. The new unemployment claims were 803,000 versus 888,000 expected. Continued unemployment claims were 5.3 million. The president vetoed the $740 billion defense bill. Congress agreed to a $900 billion COVID stimulus deal, but President Trump stated that he wants a bill that gives each adult citizen $2,000 instead of the $600 in the current deal. Existing home sales fell for the first time in 5 months, and U.S. consumer confidence dropped for a second straight month in December. New unemployment claims, continued unemployment claims, presidential vetoes, COVID stimulus bills, presidential statements, existing home sales, and U.S. consumer confidence reports are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will continue to go up because the powers that be want the market to go up. While there are many powers out there, one of the top powers that be is Congress. Congress will do what it must to drive the market higher. Notice on Thursday when it was reported that Congress passed the stimulus bill, the market indeed went up. Which brings us to our question of the week. What are the dogs of the Dow? The dogs of the Dow is an investment strategy that involves buying the 10 highest dividend yielding Dow stocks. The strategy is an attempt to beat the Dow Jones Industrial Average, which is composed of 30 stocks. So you use 10 stocks to beat the Dow average, which has 30 stocks in it. Do you use the dogs of the Dow strategy? Do you own any stocks? If not, why not? Are you afraid that the market may fall again? The market will fall at some point. But this year, despite the pandemic, the market has reached all-time highs. I don't know which way the market is going to go, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at southsideschooloffinancialfreedom.com. Here is my watch list for the week ending December 26, 2020. I trade at least 3 of the stocks on the list every week. The strongest performer on the list this week was CrowdStrike. ticker symbol CRWD in the third column. It increased 8.53% for the week, though it was down minus 1.06% on Thursday. CrowdStrike is a cybersecurity company that provides cloud-delivered solutions for endpoint protection against internet security attacks. I do not. I did not have a trade on CrowdStrike this past week, but I have traded and generated cash flow on it in the past. Looking at a summary of results, you can see that CrowdStrike has increased over 343% year to date. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? As of December 26, 2020, the Southside portfolio is outperforming the S&P 500 index ETF SPY. Year to date, the Southside portfolio is up 23.95% versus 14.3% for SPY, a difference of 9.65%. The Southside is beating SPY by 9.65%. This week, equities, including puts, calls, and ETFs, make up 89.52% of the portfolio. Cash is 10.48%. The cash flow generated for this week was 0.91% of the portfolio account value. The account value changed by minus 3.23%. Meanwhile, the S&P 500 ETF SPY changed by minus 0.03%. I sold option contracts on 6 positions this week, 4 calls and 2 puts that range from $154.35 to $304.34. You can get more details, including the total dollar amount of cash flow for the week on the website, Southside School of Financial Freedom.com. If you want to learn how to use the U.S. stock market to become financially free, then visit the Southside School of Financial Freedom.com, where you can learn to increase your financial IQ. It is where I document in my commentary blog my efforts to remain financially free. Learn how to use your money to make money. When your money makes enough money to cover your monthly expenses every month, then you will be financially free. People who work for other people for money are wage slaves. People who operate a small business are workhorses. Trading and or investing frees you from being either. If you want a comprehensive understanding about business formations, companies and corporations, the stock market, the difference between investing and trading, learn about legendary stock market investors and traders, stock market theories, and a stock trading strategy that generates cash flow, then read the Southside School of Financial Freedom publication, Swimming in a Financial Ocean of Sharks and Whales: How a Small Fish Feeds Makes Money Off Wall Street by Melvin C. Dunia, available on Lulu.com and Amazon.com. Please like, share, subscribe. ADOS, ADOS.